All right, let's go ahead and get started. I'd like to welcome everybody. Thank you for joining us today. My name is Lucas Walters. I'm a director here at Bridgepoint, and we put this together as what we hope will be a very timely, roundtable around cash management during a crisis. We've invited a few of our people who have a lot of experience in, situations like this, and they're going through it right now. So I think they'll be able to help all companies at different stages of this, whether you've been impacted now or you will be over the coming months. They're going to give you some tips, hopefully, that will be really useful. In general, what we're going to do here is we're going to have some questions that I have prepared at the beginning, probably for about the first half of it, and then the second half, what we'd like to do is have a chance for you guys to ask questions in the audience. So if you have any now, feel free to submit them. There is a way to submit in the Q&A section there along, I believe, the left side of your screen. So feel free to start submitting now, and I'll send those questions into the panelists the second half of the call. But let's go ahead and get started. And what I'd like to do first is introduce the panelists themselves. So let's start with Pam Berger. Why don't you give a little background on yourself, Pam?
Morning, everybody. Thank you for joining us today. I've been a consulting CFO for Bridgepoint. I've got over 30 years experience, mainly in early stage companies and startups. In the past, I have worked for companies anywhere from 0 revenue to 300 million in my career. I do like early stage and startup. I like working with entrepreneurs. I have worked through the dot-com bust, 9/11, the 2008 recession. We weathered a lot of storms and we have come out of it on the other side, and this is yet another one to go through, but I have full faith and confidence we'll all get through it. It won't be easy, but hopefully we can help you and we can give you some ideas and make this just a little bit easier for you. And I'm happy you're with us today. Thank you.
Great, thanks, Pam. Why don't you go ahead and go next, Ross?
Thank you, Lucas, and good afternoon, everyone. My name is Ross Goolsby. I'm coming to you live from Houston, Texas. I run the Bridgepoint practice for the Bridgepoint practice here in Houston. I've been with Bridgepoint 5 years, most of that time as a CFO consultant, and prior to that was a career CFO across several verticals, manufacturing, distribution, semiconductors, med device. I've gone through a couple of IPOs, and as Pam described, I've been through a few crises as well. Obviously, the tech bubble bursting, 9/11, the financial crisis, and now as we find ourselves here in the coronavirus impact and the impact it's having on us, both from a health perspective and an economic perspective. So happy to be with you all today.
Great, thanks, Ross. And then David Bizzaro.
Hi, good afternoon, everybody. This is David Bizzaro. I'm a senior consultant with Bridgepoint Consulting out of the Houston practice. And I've got a CFO background. I've led many finance organizations, mostly at information and communication technologies firms. I've helped lead firms through a variety of different crises, the dot-com bust, as well as the 2008 financial crisis through 9/11, and was also based in Hong Kong during the SARS outbreak and helped lead a company through that event. And then now currently leading one of Bridgepoint's major clients through the COVID-19 crisis. As a consultant, I've worked in a variety of different industries, including manufacturing, energy, professional services, and healthcare. And hopefully today I can share some of thoughts and experiences that I've had that I think have been helpful for companies and for clients to navigate through a crisis like this one.
Great, thank you, David. And why don't we stay with you with the first question here? What do you think is the key factor, the way to start here as a company when you're trying to figure out how to survive a crisis like this?
Well, clearly, when we're in a crisis like this one, the old adage of cash is king is really true. I mean, to be able to manage your liquidity is really going to be essential for survival. Cash is really the oxygen that companies need to survive throughout the crisis. And companies that have got a good discipline and process in place to manage their working capital are going to be in a much better situation than ones that are really scrambling to figure that out now. So this type of a crisis, acute crisis like this, really amplifies the need to have good disciplines and good business practices around cash forecasting, liquidity management, proper debt structure, et cetera. So it's important that companies really understand the levers of control that are at their disposal in order to accelerate cash inflows, to delay non-key cash outflows, and also to work with their creditors and investors to make sure that they have ample liquidity and capital structure in place to support them through the storm. Finally, I'd like to emphasize that really the importance to collaborate very closely across your supply chain with your key clients, with your customers, with your creditors, and with your investors, and be very transparent with them, communicate early and frequently with them to make sure that everyone understands where you are and the fact that you have a plan and that you're going to be able to get through the crisis and make it out to the other side. So I think as you do that, then you'll put a lot of those folks at rest to know that you're going to be around, not just during the crisis but after the crisis. So that's very key.
Thanks, David. Hey, Ross, what do you think about that? Anything to add?
Yeah, David, I agree with everything you said. Obviously, I think from a tools perspective, I think having a 13-week cash forecast has been something I've leaned on heavily during a crisis as a CFO, a controller, a financial executive at a company, a CEO. I think knowing where you are today is critical from a cash perspective. And I think best practices has always been to be a long-term thinker and long-term, have and execute to long-term strategies. I think in times of crisis, you just have to pull in those long-term views into much shorter-term views. And I think a 13-week forecast, which is roughly a quarter, obviously, is a good tool to be using. And it gives you one place to go to see where your cash position is. I would say at least on a weekly basis. A lot of companies are used to doing financial reporting and forecasting on a monthly basis. I would encourage you to start trying to figure out how to move to weekly cash forecasting. Get all your bank accounts pulled together, make sure you're including all your cash, gather all your inflows, all your outflows, and really start to drive deep into the levers David described. How do you use balance sheets of some of your more well-capitalized customers and vendors? If you're doing business with a Facebook or an Apple or a Walmart today, as a customer, are they willing to maybe pay you faster or even put deposits down on their orders? If you're dealing with those kind of customers or those kind of companies as vendors, are they willing to give you extended terms? Start thinking outside the box with regards to cash management and cash forecasting. And as David said, communicate. I think if you have a good 13-week cash forecast, it's going to give you a good picture of where you are and what the near term looks like. So as you're communicating with vendors, as you're communicating with customers, as you're communicating with employees, investors, you really have a crisp picture of where you are and what your outlook is, and you can use that information to improve your cash flow.
That's great. Thank you, Ross. So Pam, with so much uncertainty, how do you forecast? How do you go about doing this? Are you just having to be prepared for all these different contingencies? What do you recommend?
So coming from startups and smaller companies, take that with a grain of salt when I talk through the revenue model. But I think the first thing to do is sit down and understand who your base clients are, your bread and butter. I'll call them bread and butter clients. Those are the clients that historically you have a good relationship with. They've paid you on time. You know them very well, and you have that you're going to get paid by those customers. On those customers, I would though, however, for the 13-week cash flow, I would discount those payments just a little bit on the cash flow model. because there will be some who are affected. Now, if you have a lot of large clients like a Walmart or a Google or somebody like that, obviously that's probably not going to be an issue. But for companies that I deal with, we deal with a lot of smaller entities, and they will be affected by this pandemic. So I would discount those a little bit. The second tier is the clients that you've recently signed on, maybe in the last 6 months to a year. You don't really have a really good feel for them. You've spent a lot of time with them. They're just getting ramped up. I would, again, reach out to them. And I think everybody's going to hear in this video that communication all across the board is very critical. Communication, our vendors, bankers, and as importantly to our employees. Anyway, that said, so that's the second tier. The second tier is, I would discount them as well. They don't know you well enough. They're new to the game. Again, from the standpoint of a startup or a smaller company. And then there's your pipeline. The pipeline, for the next 13 weeks, I would mainly address the pipeline that's in the 75-90% range, where you're that close. They're right on the edge of signing, or they've already signed and you're in the implementation stage. I would stay on them. They're most likely to go ahead and pay you or ask for a couple weeks of free service. So those are a little more difficult. And I would definitely focus on your bread and butter clients, though, because they're the ones who are going to get you through this. The other thing I would do on the cash flow, and I'm bifurcating a little bit, but I would definitely think of other sources of revenue, revenue and or cash. I'll even call it cash, not even revenue. And I think Ross alluded to this a little bit, is think through your other sources. If you can get debt, the stimulus package, consider receivables. If I would not consider factoring receivables at this point, because that's pretty deep cut into your cash, but I would definitely look at your receivables, your inventory. And I think there are a few other things, and we'll talk about that later. But as far as the cash flow, I would definitely focus on those customers that are going to pay you. And again, the new people, stay close to them. It's going to be tight with them, definitely tight.
Thanks, Pam. Yeah, so coming from the other perspective here, David, you're working with a public company now. I mean, like, what you have any recommendations there on kind of planning for these contingencies, mid-flight?
Yeah, again, with a public company, it's very important that we are in contact with our investors, the investor community, and with our creditors, because we do have a substantial amount of debt on the balance sheet. Although we are pretty much cash rich right now, but we do have the liquidity that we think is going to get us through this. But at the same time, it's important that we are communicating very, very closely with the creditors and with the investors, and being very transparent with them so that they understand exactly where we are. We're not going to sugarcoat things with them. We're going to let them know where we're seeing slowdowns in our business. We're going to let them know, kind of the bright spots, and we're doing a lot of sensitivity analysis around our business and saying what will happen if our revenues drop 10, 15, 20, 30% in the next 6 months. What's that going to do to our cash flows? What's it going to do to our debt covenants? And in some of those scenarios, we'd actually be tripping the covenants. So we're very clear with our creditors about what those scenarios would be and what actions we're taking to try to avoid that. So that if we do get in a situation where we do trip a debt covenant, or get in a position where we have to start drawing down on our credit facility, the banks will understand that, and they'll understand what our plan is and what our plan is to get out of it. So they're going to be much more likely to work with us on it than if we were to keep them in the dark or bring them any surprises, because it's the last thing that the banks want and the investors want are any surprises, particularly in a crisis situation like this.
That's right. Yeah, absolutely, David. And so we've already touched on a little bit, but Ross, you know, the SBA funds, right? I mean, we're talking about obviously right now the CARES Act going on, all the stimulus funds around that. I mean, any thoughts on you know, to give to companies on how to look into that stuff and how to go approaching it?
So I have some thoughts, and I'll just speak to my experience in the last week or two. My clients are mainly companies that have less than 500 employees, so I'll focus my answer on that group of companies. Where we've been most focused over the last week is the payroll protection program that is for companies with less than 500 employees, and for, you know, all the way down to companies with 1 employee. And what it provides is what could be a 100% forgivable loan for up to 2.5 times your monthly payroll, and that's on a 12-month look back. So there's some calculations involved, and this is going to be administered through the SBA, but using SBA lenders, so banks. So you know, if you're interested in that aspect of the CARES Act, I think you should just pick up the phone and call your bank. What we're hearing is applications are starting to be accepted today, and they will be going through bank portals. So you'll need to apply through your bank. And I think the reality of that is that if you try to go to a bank that you're not a current client of, it's really not going to be worth your time. You need to go to your current bank. They're going to be prioritizing clients. I had one bank here in Houston, you know, and I won't name the bank, but they said they had a couple of 100,000 commercial banking customers, and they expected up to half of those to apply for funds under the payroll protection program. So they're expecting 100,000 applications to hit their one institution, you know, over the next several days. So I do think it's going to be a bit overwhelming to the infrastructure that exists both within the banking community and the SBA. But I do think it's a really good way to access funds through the stimulus package, and it will be forgivable if you are keeping your employees. I think that's one of the key aspects of it, and we have some clients that are less impacted, I think, by this from a revenue perspective, and so they are planning to keep and retain as many of their employees as they can through this crisis, and so they're a perfect candidate for the payroll protection program.
Great, yeah, thanks, Ross. I'd actually like all 3 of the panelists to talk about this issue. So if you don't mind, Pam, why don't you go next, and then David can give the big company perspective.
Okay, so my approach, like Ross's, is more for the smaller companies. I have filed the payroll paycheck protect. I haven't filed it. I've filled out the application. The applications are out there. Like Ross said, you definitely need a bank contact because and they're going to try to make it seamless, if you will. But with 100,000 applicants for one bank, it's going to be very difficult probably to get into. So just keep trying, but make sure the application is already filled out and you've already done the calculations. There are specific things you can and cannot do. And I think maybe later, guys, I think we're going to put this up. We could probably put the application on our website or something so people can there's access everywhere. You can go online and Google it. It's out there. But that said, so the other thing I have done is the economic disaster loan application. For those really small companies that are single proprietors or have a handful of employees, you can fill out the application online. It goes direct to the SBA. It doesn't go to an SBA lender. It goes right to the SBA. That application is fairly easy to do. All you need are your revenues and your cost of sales. You need to know who owns the company. That get a little tricky because of the affiliations, but check with your attorney or your own financial advisor on that one. I completed that application. You can get $10,000, and then they say in the next 72 hours you can get $10,000 direct to your bank account if you need it right away. That is a forgivable loan. That is the beginning of this whole process, though, because once you submit it, you say you want that, you give them your bank account, the $10,000, and for a lot of small businesses, that could be 3 months of salary, right? That could get you through the next 2 months. For a lot of businesses, not gonna, it will help a little. $10,000 is $10,000, right? But So I filed that, and then you submit it, and they will obviously get back to us with all of the other criteria they want, which it is the normal SBA requirements, I would believe, financial statements, liabilities report, things like that. Again, just you could probably Google that and find it later, but I would definitely get online and start that application.
One thing I would add to that for the smaller businesses before David jumps in and starts talking about the larger companies, I would say the banks are just now getting up to speed. So there are just a handful of banks that are really opening their portals for applications. So you just want to be ready with your application and the supporting documents when your bank goes live with their portal. And just wanted to make you guys aware of that.
And can I answer one other thing? Just to be crystal clear, because this is confusing to a lot of people. There are two different programs. There is the Paycheck Protection, which goes right to your bank or the SBA lender, and then the Economic Disaster Loan, which goes through the SBA. You don't have to go through a banker. So to be crystal clear, there are two different types of loans, and one is forgivable. The other is a normal SBA loan with a few changes. But there are two different types. Sorry, David, go ahead.
Yeah, well, you know, a lot of the assistance that's out there from the federal government is geared towards small and medium-sized companies. There are several programs out there that large companies and publicly traded companies can avail themselves of, because the government truly wants to make sure that all businesses can survive and get back to business once we get out of this. So they're putting $2 trillion worth of funding out there into the economy. So I would urge everybody, all companies, to really take a close look at which programs are right for you. The first thing I would suggest is forming a task force within your company to study the different acts and the different programs, to clearly understand, do you qualify for them? There are some that if you qualify for one, you may not be able to avail of another one. So you have to be selective and you have to do the analysis to figure out which one is going to be right for you. Some of them provide loans, some of the loans can be forgiven, some of them are credits, and other ones are deferrals. So you know, I'll walk through maybe a couple of those that larger companies could avail themselves of. One is the employee retention credit. So if your business has been shut down due to COVID-19, you may be able to avail of this credit. Or if your revenues, your income, gross incomes, gross receipts have been reduced by 50% over the same period last year. So if your first quarter revenues are 50% lower than what they were Q1 of last year, you may be able to avail of this credit, and this credit is worth up to $5,000 per employee. So there's all sorts of restrictions in terms of the levels of salaries that can qualify for this, but it's something that larger companies should take a close look at, particularly if your business has been impacted substantially and your revenues dropped off. Another opportunity that we're looking at in my client is the payroll deferral opportunity. It's a deferral. It's not a credit or a grant, but the federal government, the IRS, or the federal government is allowing you to defer your payroll taxes up to 2 years. So all of your Social Security taxes that you pay at 6.2% per employee, you'll be able to defer those from now until the end of this year, until December of 2020, not pay them now, and then you'll have to repay them, of course, over the next 2 years. So by December 31st of 2021, you'll have to repay 50% of it, and then the other 50% will come due December 31st of 2022. So again, it's a deferral, not a credit, but it will help you to free up cash flow during this critical time, and it can hopefully help you to continue to meet your debt covenants and meet your payment requirements, meet your payroll and all of your critical payments during the downturn. And once you get out the other end, then you can work out how to pay back those funds over a longer period of time. So that's something that we're looking at, and it's actually going to allow us to shore up somewhere between $10 and $20 million. So it's a very significant amount of money.
Great, thanks, David. Hey, so a question came in, and Pam, I'd just like to ask you maybe to clarify since you've done both, but a question came in that basically said between the economic injury disaster program and the payroll and the paycheck protection program, what are the major differences?
There is a cap on the the paycheck protection program. It's 2.5 times your payroll. Again, payroll is defined by the guidance in the regs, but it's 2.5, and I think it's up to $2 million. Is that right, Ross? Is it 2 million?
Yeah, I'm not sure of a cap. I know there's a $2 million cap on the economic disaster loan of $2 million.
Okay. So I
think it's actually higher. Yeah.
Yeah, it might be. It might be up to 10. Yeah, I don't know if there's.
I think it's up to 10 million on the.
There is there's a calculation. It's 2.5 times, and that is a loan that is forgivable, and it can be forgivable up to 100% as long as you use it for the reasons spelled out in the regulations, which essentially are for payroll, mortgage interest, rent, utilities. And they will, at the end of this, they will, of course, ask you to prove that you used it for those reasons. So if you don't use it for those reasons, you will have to pay it back at a percentage rate. I think it's 3.25%, something like that. The other loan is an SBA loan. My understanding is you don't need to have it guaranteed like some of the other SBA loans. They've loosened a lot of the SBA requirements for that loan itself. And that one, I believe you can get up to $10 million.
Right.
And that is, again, direct to the SBA, not through an SBA lender itself, but the SBA. And I would imagine that's going to take a little more time to retrieve those funds. The other one I would think would be you could get the funds a lot more quickly. I could be wrong about that, but the requirements to get $10 million seems it might take a little longer to get the cash that you need.
One of the things I've heard, Lucas, is that the SBA is going to choose how much to loan under the economic disaster loan program. So they'll take the applications in and determine how much an applicant will receive under that application. And I haven't heard that same thing under the Payroll Protection Act program or the Payroll Protection Program. I think the expectation is when you submit your application, obviously subject to the caps, you should expect to get that from your bank, assuming the funds are there and the $350 billion hasn't been consumed.
The other thing I will say is on the paycheck protection, you will have to submit some type of payroll form so that they can support, or you can support what you're asking for. You just can't ask for it and not have that support.
Yeah, that makes sense. Absolutely.
Right.
Okay, well, let's go ahead and move on and dig a little bit deeper into kind of managing your income, receivables, that side of your business. Why don't we start with Ross? What are some thoughts from you on how to do that?
Yeah, I think from my perspective, I'll answer a lot of these questions through the lens of a 13-week forecast. I think when you look at inflows, obviously you start with your accounts receivable. If you've already performed the service or delivered a product, you are owed money for that, and that's where you should start your efforts and reach out to customers, reach out early and often, communicate. You'll hear this a lot from all of us, communicate. Where you've got your larger receivables, make sure you're in contact with those customers, make sure you understand what their payment plans are and build those payment plans into your forecasting. As you work out further in time, obviously your receivables may come in as quickly as 15, 60 days. You should expect them to be slower now than they were 6 months ago and build that into your forecast. But you'll, at some point in your 13 weeks, you'll go past that period of time. And so you'll need to pull in people from your organization. And I would encourage everyone to not do these forecasts in a vacuum. Pull in the organization, especially the sales organization, those boots on the ground. They're really seeing frontline what's happening with demand for your product and service, and have them participate in some assumptions that you'll build into your 13-week forecast for those revenue inflows. But going back to kind of the near-term receivables question, I think if you are starting to see a slowdown, start to implement incentives to get the customers to pay faster. Maybe consider issuing a payment discount, or go ahead and negotiate aggressively on the front end to get your customers to pay you faster. I think cash is king, as David started out this broadcast by saying, and I think that's one of the ways to get cash into your business faster, is to incentivize customers that may take advantage of that right now, and then maybe build some of those incentives into products and services you're going to be providing over the next 2 or 3 months. Maybe go ahead and introduce payment discount with new accounts receivables terms with your customers proactively, so you can incent them to pay faster. And again, I would encourage those companies that do business with companies that have healthy balance sheets. Now's an appropriate time to go to those customers and ask for deposits on product purchases or services. It would not be inappropriate to enact some of those policies in a crisis.
All great stuff. That's great, Ross. Pam, do you have anything to add?
The only thing I would add is on the receivables, I would be creative with that. There are certain things you can do with a lot of clients. And again, I'm coming from a smaller company standpoint as opposed to what David would be doing. But I think you can, a lot of them are in the same boat everybody else is. We're all in sustainability. We're all in survival mode. If there is a way to get them to pay up front, so if they have a product and they pay monthly, if you can get them to pay up front, you give them a nice discount, that might go a long way. Alternatively, they may need it to go the other way, and if they do that, then maybe there's a penalty at the, I hate to say the word penalty, but maybe that's what you do. You roll in, so for the next 6 months, you take that 6 months of revenue and roll it into next year, so you'll get paid more money next. You'll get the money, but you won't get it until next year. That doesn't help you today, but it does help them. But I would try to be creative. And the other thing I would do is, and I think Ross alluded to this, is go ahead and reach out to your employees, boots on the ground, and not just, I would reach out to most of your employees and your, your executive team. Get them to be creative. Think about how you can pivot. Think how, we've all seen in the paper companies that are coming up with these new ideas to help the economy, but on the flip side, they're gaining revenue. The alcohol industry, I mean, that's a great example where they're making hand cream. That's a great idea. And somebody, we're all in this, I'll call it the stupid zone, where you can't see in front of you because you're right in the middle of it. But if you engage your team and you engage your employees who are very creative and they want to help, they may come up with some ideas that we haven't even thought about. In a handful of people, if you expand that group and again, communicate, they want to be engaged. They want you to reach out to them. So you can't do that with 1,000 employees maybe, but for a company the size as I do, 20, 30 employees, I think it's a great idea to think how you can pivot. Maybe you can do some biz dev or joint venture, or maybe even some kind of a partnership with somebody in the interim to help both companies get ahead and get more revenue, i.e. cash.
Yeah, absolutely, Pam. And so David, yeah, talking about the other side, but for a company with more than 1,000 employees, what are your thoughts there?
Well, again, I think it just magnifies the impact of good, sound business practices. And if you're following these disciplines and practices without a crisis, when you get into the crisis, you're going to be in much better shape. If you haven't developed these capabilities and you're doing it now, then it's it's going to be more difficult for companies that haven't done it. But one of the things is having a regular systematic review of your accounts receivable aging. So each month, companies should be looking at their accounts receivable by aging bucket, by client, and making sure that aging analysis is driving action around the ones that are continuing to age, or where the exposures are, or companies need to ensure that also that they've been properly accruing or reserving for allowance for doubtful accounts for the ones that they don't think they're going to get paid. if those companies are already distressed companies or whatever the case may be. But that's a practice that we always implement in our clients, and I think the fact that we had that process in place before we got into this crisis has enabled us to have much more visibility and better control around what accounts receivable we have out there today, and to be able to take action upon it. And then as you drill down into that, then you need to be very selective about the clients that you're pursuing as you go forward, based upon their credit worthiness. So you have to be very selective and say, are these clients, which ones of them are really likely to survive through the crisis, and which ones aren't? And that's where your focus needs to be from a commercial side. And also, if you're working with them and maybe even allowing some of them a little bit more leeway in terms of when and how they're going to pay you, you really need to dig into their balance sheet and their situation, and communicate with them to understand what their plans are to get through the crisis, so that you have peace of mind that they are going to be able to pay you eventually. So you have to be very selective and not treat all customers the same way. Really do a thorough evaluation of their credit worthiness in this crisis.
Yeah, absolutely. Yeah, and so why don't we stay with you, David, and why don't you talk real quickly about payables. Let's talk about how to manage expenses and payables right now. And obviously headcount's the big one. You're hearing stuff about furloughs and layoffs, and maybe even people taking pay cuts across the board. I mean, what are your thoughts there?
Well, let me talk about vendor management first, because we've also been very selective about our vendors at our client, and looked at the ones that are really mission critical over the next few weeks and months to get us through this. And in some cases, we've actually speeded up payment to them. And it's rather than paying them by check, making sure we're paying them by ACH or even wire transfer, so that we're getting the cash in their hands so that they can continue to operate and to support us through the mission critical efforts. And then other suppliers that are maybe not as critical right now, but we definitely want to maintain relationship with later, communicate with them what we're doing, when we plan to pay them and how we're going to pay them, and giving them peace of mind that we do have a plan, and we will be around after this all blows over, and doing the same thing with the creditors. But I think that that communication, being selective, and then also looking at what expenses can be deferred. And the first things to look at there would obviously be that your CapEx spending, because your CapEx spending typically is not going to drive immediate term cash flow. It's usually an investment in the business that's going to bring longer term cash flow and return on investment. But I think this is the time when most companies are looking at pulling back on their CapEx. So work with your CapEx vendors to make sure they understand that, hey, we do have a plan to get through this. We do plan to buy this equipment from you, capital equipment, but it's going to be delayed, and just help us to get through that tough time.
Absolutely. So what are your thoughts, Ross?
Yeah, I would just say, David, this is a great description of vendor management. I would say when you look at your spending, historically, the way accountants would look at spend is through a fixed cost versus a variable cost perspective. And normally when you do your planning and your cash management, your fixed costs literally are fixed and they're unchangeable. They're things like debt payments, rent payments. And today in a crisis, I think those are now in play. I would encourage you to call your banker and see what their appetite would be for some deferrals. I'm hearing positive responses from clients that are hearing from banks that they're open to that idea. Now, obviously, those payments get tacked on the end of your loan, but it's certainly a way to free up some cash flow that would have otherwise gone to a fixed expense. And I would do the same with landlords. I think, real estate investors are at a point where they may be able to listen to the idea and be open to the idea of deferring some rent. So as you look at your vendors and you're managing your vendors, don't forget that those fixed income or those fixed expense items, if you will, that you might not have considered in the past. I think during a crisis, you should absolutely pull those into play. I also think knowing where you are is important. So as you're communicating to banks and landlords, they're going to really want to understand and get an outlook from you. So be prepared to talk about your business, how it's been impacted, be transparent, be candid. And I guess the last thing I would say with regards to expense management is, in addition to kind of prioritizing vendors, mission critical vendors, so that you can continue to derive revenue, I think you need to really look hard at how to maintain as many of his employees as you can. You don't want to do a reduction in force if you don't have to, and things like the payroll protection program are in place to help companies, deal with that. But if your business is more impacted by COVID-19 than others, and you feel like the only way to make it through that is to do a reduction in force, I would encourage you to be very empathetic, be very open and candid. And one of the most demonstrable ways of empathy that an executive team can do is do an executive pay cut. If you're forced to do a reduction in force, I think it would be a true sign of empathy if the executives would also look at maybe a pay cut during this crisis.
Absolutely. It makes them feel like that you guys are all in this together, right?
Right.
Yeah. So Pam, any other thoughts?
I think two things. I think inventories is one place to watch and be careful about. None of my companies have inventories, but I have worked for companies with inventory, and with the supply chain from China being so tight or non-existent, it's something everybody just needs to be aware of and focused on. The other thing is on headcount. I just want to talk a little bit about that, because there are so many people who, employees are afraid, and rightfully so. There's a lot of fear going on out there. If in fact you do have to lay somebody off, Ross is right, just be very empathetic. The other things you can do though with that is, depending on the size of the company again, so for the companies that I have, for instance, you could have a 20% across the board pay cut for 3 months or 2 months. The executives take a cut in pay if they can. There are other things you can do. You can furlough as opposed to layoff. Furloughs typically 3 to 4 weeks, so they're still employed by the company. They may or may not get benefits. That goes to your benefits program. Talk to your HR people about that. But you can furlough as opposed to layoff. My understanding is they still can get unemployment depending on the state. If they're furloughed, as long as they're not working for you and you're not paying them, they still can get unemployment. And that helps, I think, the team spirit, knowing they're furloughed as opposed to laid off. Eventually, you may have to lay them off. The whole idea behind the Paycheck Protection Act is to try to make sure that doesn't happen. But if it does, you have a window where, and again, get with your attorneys on this or your financial advisors, but there is a window. If you lay them off today and you hire them back before, I think it's June 30th, you don't get dinged for that. You will get dinged otherwise, but you won't if you hire them back by June 30th. And again, read through the documents. And the other thing, one other thing I'd be very careful about though, everybody, is remember payroll is, it's a government, the Department of Labor is out there, and you have to pay people for time worked. You have to. So when you're doing those cash flow projections, make sure it's not, if you're in arrears, make sure you understand if you lay somebody off today, they may have 2 weeks of pay behind them that you're going to have to pay out. So be very careful. Most accountants know that, but if you're out there on your own trying to do this, understand there are some mandatory requirements for paying people for work provided. So be very careful with that. And also, if you do scale back salaries or wages, there is a minimum wage requirement, so you can't just have everybody work and not get paid. That's not legal. You can't do that. You cannot do that. So be very careful with those Department of Labor laws. It's just a warning. It's all doable, but just be careful and understand the laws underlying the pay for work. I think that's everything I got there.
Thanks,
Just a
Pam.
caveat, only because it's I've heard a lot of people say, well, we'll just tell everybody, I want everybody to work, but I don't want to pay them. Well, you can't do that. You can't. That's just not, you just can't do that. So be aware of that.
Well, I'd like to leave some time for Q&A here, and I think I misspoke at the beginning. I think your Q&A button is actually in the middle of your screen, that little thing that pops up. I believe that's right, and we do have a few questions. I think I can answer this first one, but I want to actually, if anybody in the group, you guys might be able to tell me I'm wrong. One said, if an employer receives funds from the PPP, does that exclude them from deferring payroll taxes to 2021, 2022? My understanding is it does not, because the payroll taxes, the federal payroll taxes, that is, I'm going to be clear. My understanding is the federal payroll taxes, that is the incentive you have for that. You cannot include federal payroll taxes under the PPP. You can include state taxes, but you cannot include federal taxes, and that's the incentive that I understand the legislation is given, is deferring them. And so there was actually a question that came in, and I want to make sure we were clear, because it did say, what is the difference between a furlough and a layoff? And I know you touched on it, Pam. Do you want to kind of just maybe address that specifically real quick one last time?
Right. I'm not an expert, but a furlough is essentially an unpaid leave of absence. The employee is still employed. They're just not working, and as long as they're not can't work an hour, they can't work 2 hours, they can't work at all because you have to pay them otherwise. But you're essentially telling them to stop working today. When you are able to bring them back as a full-time employee or part-time employee and pay them, then they come back, but they're still, quote unquote, an employee of yours. They don't lose. Technically, they should not lose benefits, and health insurance is the big benefit, right? Because of the health crisis, we want to make sure people have their health care. So that, and again, you're going to have to check with your HR people or your insurance carriers to make sure that's the way it works for them. But what I see in the intent is for a furlough, you keep them as employees, they keep their health insurance. There may or may not be COBRA, again, that's up to the company. A layoff is just that. They are no longer employed with the company. They are not employed with the company, period. They go on COBRA they go on COBRA, they have to pay for it themselves. It's the exact opposite, essentially. And they get unemployment. My understanding, again, with furlough is they get unemployment with that as well, as long as the company does not pay them, is my understanding. Again, check with your attorneys and keep reading online that, everything gets updated on the hour every day and things change, but that's my understanding of the difference.
Yeah, and I think they did actually make, the federal government came out and said that it's not state by state anymore as far as getting the unemployment. I believe that now they've said anybody who is furloughed can claim unemployment, that they're not leaving it to the states anymore.
Yeah, and this is so important to have a task force set up within your company that would have cross-functional representation of your legal department, your HR department, and your finance and accounting department, so that you're studying all the different angles of these different options, because it is complicated, it's coming at us fast, and it's changing. So some of it, the guidance hasn't even gone out yet. So I would just urge companies to form an immediate task force to study what that is and to update management on really a weekly and even a daily basis as to what their assessment is in terms of the different options.
And
very, very well said.
Yep. I'm sorry, for companies the size of ours, we don't have access to all of those people because one person does all of those jobs, or two people. But in that case, I would tell people to either get a hold of us if you're one of our clients, or do a lot of research online. There is a lot of good information out there. There really is. You just have to be careful what you're reading. But I think the intent from the government is they want small businesses to keep operating. They want people to get paid. They want people to have their health insurance. David's exactly right. It is financial, the legal, the HR. I mean, it's very complicated. However, just I go back to the intent. The intent of the government is to keep everybody working. And in good faith, I think if we work under that guise, we're all going to be okay. We just need to be smart about it and understand the intent of the program. Programs, plural, if you will.
Thank you guys very much. So just one last thing here with our final few, 5 to 10 minutes. Let's talk about capital markets, debt and equity options. How is this really, longer term going to affect the ability for people to raise money? And what should people be doing now as a result? When it comes to dealing with your bank, even.
I would say with your bank, as everybody has indicated, communicate, over communicate if possible. Even if you don't have debt, communicate with your banker because you may need them down the road for a short-term loan. The other thing I've seen in the past, again, this is a small company, but go to your existing investors, see if you can, and that could be in the form of a junior note, depending on if you have senior debt. It could be in the form of a SAFE agreement. It could be convertible debt to equity, or it could just be downright equity. Again, that takes an attorney to talk to and deal with, but you can't, there is cash out there in those circumstances, and I have seen that in the past. You just have to be careful, again, with valuations, et cetera, if you go the equity route.
Yeah, I think it's definitely going to slow down, activity in terms of people being able to tap the capital markets. Most companies that we've talked to have stopped issuing guidance. Our client does issue guidance, and we've just recently issued guidance, but we are not going to continue to issue guidance, in this type of situation, because I think it's somewhat superfluous at this point if you don't really know where the overall economy is going. But companies need to step back and look at what was their financing strategy. Were they in pursuit of private equity? Were they in pursuit of doing a deal or doing an IPO? Obviously, those timelines are going to be extended now, so they've got to figure out how are they going to continue to operate over a longer period of time until they can actually get that inflow of cash through a funding event. So the events are definitely going to be extended, and companies need to figure out how they're going to survive in the meantime without having that inflow.
Ross, what do you think?
Well, I think I'll defer to David for the public market views and capital market views from a public company perspective. But I think from a private equity venture capital perspective, if you're backed by VC or PE, obviously you're having conversations with those guys. If you were talking to them monthly, you're talking to them weekly. Now, if you were talking to them weekly, you're probably talking to them daily. And those conversations are very important. Again, being candid and upfront with where your company is, they can be very helpful. I've talked to several folks that are in the PE business, and right now I think they're going to find it very challenging to get a new deal done. I think it's not their nature to do things virtually. They like to do things face to face, and I think there's a lot of trust that gets built, between two human beings meeting face to face, and a lot of deals get done, in those types of settings, and it's going to be very challenging to do that virtually. That means they're going to have more dry powder, I think, to help existing companies weather the crisis they're in. I do think PE firms and VCs have had to turn more internal than they probably have in a long time, and they can be a source of support during the crisis, as Pam alluded to. I think from a debt perspective, I think interest rates are at an all-time low. So if you're in a position to restructure, to take down debt because maybe you're not as impacted by COVID-19, now's a good time to do it. Banks are not out of business; they're still lending. Those markets are still open. I think if you're heavily impacted by COVID-19, it's going to be a challenge to tap the debt market as well.
Right.
Yeah, absolutely. So we're down to our last few minutes here, guys. So I just love to get some parting shots for the audience here on just thoughts that they can take away. So let's start with Pam. Why don't you go and go first?
I think for me, again, communicate. Be very transparent with your investors, with your bankers, with your employees as much as you feel comfortable with. Use the employees you have, the creative talent you have to understand how you can pivot your business. Make sure you do that 13-week cash flow and stay on it. Do not venture away from that because that is mission critical. Again, for my size company, I don't know for David's size if a weekly makes sense, but for the companies I have clients, it makes perfect sense to do it. And some are even daily, looking at the cash balances daily. And that's mission critical. But I think with the stimulus packages, I would go ahead and apply. There's no reason not to, unless you just, it's just, you know, you're one of the lucky creatures in this whole deal where your business is taken off because of the pandemic. There are a lot of businesses that are doing really well right now. There are a lot who are not, but the ones that are doing really well, they have a different approach at this juncture. And if anybody knows those, send them to us because we're just kidding. So I think that's it. Just communicate, be empathetic to your employees. Everybody is afraid. There's so much fear going on. There's a lot of misinformation. So talk to your trusted advisors. They will tell you the truth. They'll be transparent, and you'll get good advice from them as opposed to just Googling things off randomly unless you absolutely have to. That would be my takeaway.
Absolutely. Ross?
You know, I think my takeaway is communicate, whether it's to vendors, customers, investors, employees. You know, we're at a very unique time in history right now. We are separated physically, but we still have ways to connect virtually and communicate. And we should be very, very proactive right now, more so than we've ever been in our outreach to that group and that community. And just on a non-economic note, we're obviously consultants, we're finance people, we're accountants, so we're certainly very focused on business and the economy. But you know, if anyone's out there on the front lines dealing with this pandemic and this virus, just a quick shout out to you and the work you're doing in the healthcare community. What you're doing is vital, and you're not getting near enough credit for that. And you know, if there's anyone listening, you know, thank you and kudos to you.
Agree.
Great. Yep. David, go for it.
Yeah, I guess my message would be don't panic, keep a level head, continue to implement what have always been good, disciplined business practices that are going to get you through. Short-term survival is number one. It's managing your liquidity and getting through the storm. Number two is understanding the impact that that's going to have on your supply chain, on your customers, on your employees, your suppliers, your creditors, and your investors. Because you do want to get through this, you want to come out the other side, but you also want to come out the other side with good relationships with your supply chain. You don't want to come out crippled and be in a worse position vis-a-vis your market or investors or anybody else. So it's a two-pronged approach. It's survival, but survival, understanding and communicating how that's going to impact others and setting expectations and meeting those expectations and not surprising anybody along the way.
That's great. Thank you. And thank you guys, everyone who attended and the panelists here. Thank you, Pam, Ross, and David. Really appreciate you guys. I had one real quick parting thought that I just want for recording for those who have to go. But for one, you know, I want to reiterate what David said. With the stimulus, you know, anything that's going on with the stimulus and the CARES Act, you know, their information is coming at us daily right now. So, I mean, things that I thought yesterday, or I'm already finding out new information today. So, well, I would just really recommend you stay on top of that, as David said. I mean, you really need to be watching it. You know, we're telling you what we know as of right now, but it could change. So just stay on top of that. The other thing that I would mention is that some of you asked for specific things in the questions. You asked for like a forecasting template or something like that. What I'd ask of you is that you reach out to me directly, either over LinkedIn, or if you have my email, feel free to reach out directly, and I'll see what I can do to help you. I would love to help if we can. But that would pretty much be it. So thank you guys. I really do appreciate it, and I hope you all weather this well, and wish you the best. Enjoy your weekend.
Okay.
Stay safe, everybody.
Thank you. Bye. Thanks, everybody.
Bye-bye.